Hello, everybody. My name is Elish Eisner, and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This video is about what to do in preparation for 2023, whether you do it on December 31st or January 1st. Some of these suggestions are once per year checkups. What I do firstly is I look into my Quicken, where I update religiously the expenses, income, and stock prices, and then I look into the brokerage accounts, which is Qtrade Interactive Brokers and Wealthsimple. So first thing I do is I check my net worth to see if it's going up. Mine has gone down by about 150K this year, so not too bad considering the bear market that we've had in 2022, losing 3% in net worth. In the overall and yearly trend of the net worth, you can see the June and October 2022 lows. I review the portfolio returns in absolute dollar terms. It went down, of course, but my Qtrade is showing 2,700,029. Interactive Brokers is at 553,000. Where I have about 161,000 on margin from buying stocks in June and October. And Wealthsimple is at 419, which is expected. When I add in the $250,000 for private equity and 880,000 for primary residence and the one remaining investment property, I am back roughly to 4.8 million, so that pretty much checks out. The net worth was also affected by the sale of the third U.S. property, which sold for less than I had it tracked in Quicken, but with the strong U.S. dollar, I didn't do too badly. The 125,000 of dividends I earned were also used to soften the blow this year and gave me enough to live on. I received 101,000 from Qtrade, 15 from Interactive Brokers, and another 10 from Wealthsimple. Also compare your portfolio against benchmarks. Qtrade has a nifty tool where you get a letter grade, and I mostly want performance and some income. I'm also beating the TSX handily in the long term with my corporate stocks, so that's not bad. You'll note my Canadian portfolio is more volatile both up and down than the benchmark, which is fine with me since it will outperform in the long run. I also review the last year's spending and budget for next year. The only serious trouble spot is the taxes for me, which is due to the sale of the third U.S. property in 2022 and the CRA having me prepay my taxes in 2022 based on the high amount of income in 2021. This will continue for 2 more years, unfortunately. There are a few negative amounts where prices went up from the previous year, so I will have to adjust the numbers in the budget. Some are just timing issues where the budget is prorating the expenses, and they happen sooner than the budget thought. Specifically, in the budget, I spent more on clothing because I bought 2 pairs of new runners and treated myself to some t-shirts from a YouTube channel I follow. The computer expense was big because I bought a new used computer plus an SSD drive and a regular drive and jump drives for storage. I should raise the amount in the budget. The condo maintenance fee had an unexpected one-time assessment, so that's why it's higher than normal. The legal and professional fees were higher because I needed to budget extra for a US accountant, and I discovered and corrected that I double entered my Canadian accountant fees, so it's actually lower than what it's showing. My licenses were high because of my WordPress license for CanadianMoneyTalk.ca, so I will need to adjust the budget. Other items just went up with inflation and the budget needs to be bumped up. I also saw that I spent significantly less on transit and meals than I budgeted for. This reconciliation is valuable to discover if anything went wrong, or I am fine with what happened and just need to adjust the budget a little bit. The next thing you can do is set your financial goals for the coming year. Do have goals, post them somewhere. I had a $4 million sign as a net worth goal and changed it to $9 million because I surpassed the $4 million. and didn't have anything in between. And if you have New Year's resolutions, make sure to plan to invest monthly. If you're not investing, start now. Save a certain amount by doing something specific differently. Most people do general goals like lose weight or be better with money, and surprisingly, nothing comes of it, and they stop trying a week into the new year. When you think ahead to the end of 2023, what would you feel that you accomplished? What if you cut your credit card debt by half? What if you were able to boost your savings account to 4 figures or even 5? Or build up that emergency fund you may have had to dip into this year? Think about what you want to celebrate at the end of 2023 and then set some goals to help you get there. I'm a fan of the SMART method of goal setting. SMART goals are specific, also simple, sensible, significant. M for measurable, but could also be meaningful and motivating. A for attainable, or agreed and achievable. R for realistic, also reasonable, relevant, and resourced, results-based. And finally, T for time-bound, time-based, time-limited, time/cost limited, timely, or time-sensitive. So, for instance, become financially secure isn't a SMART goal because that statement is ambiguous and unclear. On the other hand, save 5,000 in my emergency fund by the end of 2023 would be considered a SMART goal because it's specific, measurable, and timely. So, write things down and share them with people for social accountability. Going back to budgeting, make a budget that works finally. Listen, we know a lot of people don't bother with a budget. A survey of 1,500 penny hoarder readers in April 2019 found that 40% of them didn't have a budget. But you really do need a budget, especially if you are in debt and in financial trouble. Make sure you direct where the money goes. You can try out one of the budgeting apps, go old school with a pen and paper, set up a bullet journal, a budget binder, or an envelope system, use Excel, use Quicken like I do, whatever works. And my motto is if it works for you, then it works. Review your spending over the past year and be honest about it. This is a deep dive into your budget, like I showed you. We know this isn't going to be fun. Well, for me it was. In fact, it's probably going to be pretty tedious. For me, it wasn't. Here's a shortcut. If you use online banking or an app like You Need a Budget or Mint, you likely have access to graphs that show how much of your income went to specific spending categories like food, entertainment, and household expenses. However, you can reconcile your spending without digital tools. Why is this important? It's how to find out if you're actually spending your money and where it's going. You might think you don't have a single penny to spare, and that's why tumbleweeds are rolling through your savings account. But track your expenses, and it can reveal a different reality. One where you've actually spent quite a bit of money, say, on scented candles rescued from clearance shelves at Walmart. If you're having trouble achieving your financial goals and can't figure out why, knowing exactly where your money goes is the first step to bringing your actions in line with your goals. Once you've tracked your expenses, you're ready to move on to the next step. Another thing you can do at the end or the beginning of a year is to pull your credit reports and examine them for errors. When you go over your credit reports with a magnifying glass, here's what you might find. Accounts that aren't yours. It's possible you have accounts on your credit report that actually belong to someone with a similar name. Do you, Karen Smith, really want to have the overdue charge card belonging to Karen Smythe on your credit report? Accounts you didn't realize were delinquent. Maybe your dentist's office repeatedly sent the bill to the wrong address until the unpaid bill wound up in collections, leaving a giant black mark on your credit report, and you weren't aware of any of this until your application for a car loan or mortgage was turned down. Outdated or incorrect information about your accounts. Perhaps you paid off a loan last year that's still showing up as unpaid, or your credit card balance is listed as being much higher than it's ever been. These could significantly ding your credit score, and those three little numbers hold a lot of power over your ability to access credit in the future. All of these errors can be disputed by contacting the appropriate credit bureau. So get the credit score and see how it is moving. Use Equifax, TransUnion, or Borrowell. The first two are the official Canadian credit reporting agencies, and Borrowell pulls the full credit report from them and also gives you a credit score number. You can apply for all three of these online now. Review your financial plans at the end or the start of a new year, including the Excel plans themselves if you did them in Excel, and see how you're tracking for retirement in terms of asset accumulation. Are you on track? Do you need to make adjustments? If you need to make adjustments, it's better to make them sooner rather than later. Check out your mutual funds and make sure that they are still 5-star funds, meaning they are beating the other mutual funds in the same category. Check your fees. Your brokerage or financial advisor will give you disclosures, sometimes with your tax documents or with your statements, to tell you how much fees you have been charged. Plan your year-end taxes. Are you going to sell something? Make sure you know what effect that's going to have on your taxes in 2023. Here's a couple of items I mentioned in a recent video, but I think they bear repeating. If you are buying RRSPs all year, which you really should be, you don't have to do anything. Otherwise, prepare for the RRSP season and buy by March 1st, 2023. If your payroll department doesn't know about your RRSPs that you're buying, fill in a T1213 request to reduce tax deductions at source to get less tax taken off your payroll, so you are not giving the government an interest-free loan and wait all year for a big tax refund up to 16 months later. Do any tax loss selling, which is selling investments for unrealized capital losses in your non-registered account, which can be used to reduce any capital gains already realized in 2022. Sell these now so the transaction completes by December 31st, so sell December 28th at the latest, so you can offset any capital gains this year. Losses can also be applied retroactively to gains realized during 3 previous years. And start on personal taxes, including exporting transactions from January 1st to December 31st. On January 1st, start exporting transactions out of your trading and bank accounts for your taxes, organizing statements for your accountant, even though mine wants an extra 2 weeks before and 2 weeks after the year in the statement. Each account will be different. Get the adjustments for the adjusted cost base for your exchange traded funds for deductions. So what you can do is find the ETF adjusted cost base after distributions for the year. Your ETFs get distributions in the calendar year that you will pay taxes on, so you need to increase the adjusted cost base on the exchange traded fund by the amount of the distribution, so you don't pay tax on the distribution and keep the same ACB, which would be double taxation, once now and the second time that you sell. So this is important, and it's a bit of administrative work, but the ETF companies have gotten better at giving you this information or making it easily available. And wait for January 1st to invest the fresh $6,500 into your TFSA all in one lump sum to allow compounding to begin sooner rather than putting the money in during the course of a year. And before December 31st, if you need any cash out of the TFSA in the next few months, pull it out now so you get the limit back January 1st when the limit recycles, so you don't have to wait a full year to get the limit back. So I hope you found these year-end and once per year checkups useful. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.